Okay, good morning, everyone. We have an exciting 45 minutes ahead of us. And thanks for making the time. I hope none of you were or was busy working on GameStop stock. But yeah, hopefully this session is going to be even more exciting than trading in GameStop. Yeah. So welcome, Boris. And we have a phenomenal today a panelist, and Boris and I are good friends, but he's also obviously quite a celebrated VC in Canada and in North America, and we felt Boris would be an interesting one because actually he has done many interesting things. Obviously, he invests heavily into SaaS companies, but also as an entrepreneur, he has done many things from moving from industries of traditional brick and mortar to internet, and then working with obviously big players like Amazon, etc. So it's going to be interesting one. So Boris, why don't you share a little bit about your experience and life in general, or whatever you want to share?
Yeah, happy to, and thanks for having me, Pankaj. Really excited about doing this with you. So I think the quick headline of the last 20 years of my professional career is entrepreneur turned investor. Started a internet marketplace for used rare out of print books back in '99, so Internet 1.0, and ultimately, sold that to 8books, a competitor of ours in Canada. Joined their senior management team, and then we sold 8books to Amazon in 2008. Kind of an amazing ride for me. 8 years of starting from really the early stages of starting a startup and setting up IKEA desk and getting your office ready for a company, to in the end co-running a company of about 140 people with a annual turnover of the platform of roughly $250 million. I then, after the exit to Amazon, decided I wanted to figure out the other side of startups, which is the investing side. So I started investing in early stage startups, first on my own account with my own capital. And after I had kind of formulated a little bit of an investment thesis and had a little bit of a track record, then turned that into kind of a full-time profession by starting Version 1 Ventures. We are now on our third fund, which is a $57 million early stage fund. Two partners, my partner Angela, based down in the Valley, and I'm based here in Vancouver. And really centered around a very simple investment thesis of investing in mission-driven founders at the earliest stages. We just feel that the more passionate mission-driven founders are about the problem they want to solve, the most successful they will be in the long run. And we do that across many verticals. Kind of the bread and butter is enterprise SaaS and marketplaces. But we've been very active over the last 3, 4, 5 years in emerging areas like crypto and blockchain, healthcare, and most recently, climate and energy.
Perfect. Yeah, so the first SaaS which I remember, and actually I was validating it with someone last evening, I remember of something like a Hotmail sort of thing, where really we did not have to download anything on the computer, and we just started using. In fact, when I moved here, we used to do the sales prospecting using a Hotmail account. And so how do you think the SaaS industry business has changed in last, say, 20, 25 years? Any top 2 or 3 things which come to mind?
Yeah, I think there's, when you think about the first generation of SaaS businesses, right? I think that the real differentiator was a new way of delivering the product, right? Instead of on-premise, you delivered it over the cloud. But often these products were roughly, the same as the on-premise products, just with a different delivery method, right? And I think what has happened after that is kind of just a fundamental rethinking of, so if you deliver a software product over the cloud, what else can you do with it, right? And how else can you create a product, right? And I think we've seen tremendous amount of different ways how that has influenced everything from the sales and marketing motion to how people use it. So just a few examples. I think today the most successful SaaS companies think about going to an individual user first instead of kind of the CTO, and kind of have really nailed that bottom up viral growth, and really don't necessarily need a big enterprise sales force anymore, right? I think on the product side, collaboration has become a key central element of every single SaaS software. In the first iteration was very much focused on the single player use case. I'm making you more powerful in using the software. Now it's like I make whole groups, whole companies more powerful by collaborating. And then I think most recently, just everything around all the innovation around AI, artificial intelligence, machine learning actually has just automated manual tasks that I had data entry, data processing and stuff like that I still had to do myself in the software. And now the product has gotten so much more intelligent and kind of freeing the user up from these repetitive manual tasks. So ultimately you see exactly that thing, like that cycle in every single vertical. When a technology comes to life in the beginning, the first iteration is very much just a replication of the old technology, just with a new delivery method. And then as you get more scale, as you get more sophistication, then you really see kind of the second generation of these software products. And we've seen that in the web with kind of the emergence of Web 2.0 and social networks kind of emerging and really creating this completely new layer and network on top of what we've seen initially, and we've seen that now, as I just described, in software as a service.
So, I mean, I'm definitely not a B2C person. So in B2B SaaS, if you have to pick say one company which really today inspires you, you might be investor, or you might be regretting that you did not invest in that company. Whatever, I think which one would be, and why do you think? What are like one or two things which you really admire about that company in SaaS?
Yeah, I think I am personally incredibly impressed by companies that have created a completely new category, right? And doing that in an incredibly capital efficient way. And I think that the one that really comes to mind for me, and unfortunately I didn't get a chance to invest, is Slack, right? It's like, even if the ultimate outcome was perhaps not what they had wished for, and staying an independent company, but it's just an incredible achievement of a category that not a lot of people looked at or kind of had written off because there were a few relatively unsuccessful or kind of not at scale products out there, right? They created that category. For the longest period of time, Slack had no enterprise sales team, which just kind of shows the strength of the product and the built-in network effects and the built-in viral effects, right? I think Slack also shows the danger of if one of the incumbents, in this case Microsoft, kind of puts the head to a new entrant, right, and fights them with all of what they have in terms of customer relationships and product power, et cetera. It becomes tough to really grow as a standalone company. But overall, I think the success of Slack is just an amazing one. And now we've seen it certainly repeated in other areas. Zoom comes to mind, and they funny enough they having the same challenges as Slack now with Google and Microsoft actually going after video conferencing. So it's interesting to see how how quickly you can create multi-billion-dollar companies, but at the same time, then how quickly incumbents fight back once you create these kind of new standalone category leaders.
And particularly a company like Zoom, it's not like a new idea or something. It's like a very core basic service which they really mastered and deliver great customer experience. Yeah.
Yeah, I mean, the core innovation of Zoom has been you can participate in a Zoom call just through a link, right? You don't have to download anything, etc. in the first place. And I think that was just, when you think about all the old products we had, it was just way more complicated, right? And it's interesting. Sometimes, listen, it is just a core insight for me. It's always, if you can remove friction, right, from onboarding new users, you're onto something, right? I think a classical example out of the consumer space is YouTube. YouTube was one of many, many video uploading services at the time. But what they did much better than anybody else was making it super easy for people to after they took a video, to upload it and reduce that friction. And they nailed that process better than anybody else, right? And I think it's kind of a lesson learned for any SaaS company, and ultimately any tech company, right? If you can reduce the friction of the initial engagement for a new user, you're onto something.
So, attendees, if you have any questions, please feel free to put them in Q&A part, and we'll start with those questions also. And so let's come to a little bit of the cost and the speed of building a SaaS company. Has it changed significantly with all these, obviously, cloud service providers, infrastructure, API services companies, etc.?
Yeah, I mean, obviously, I mean, I always go back to when we started our own company back in '99. We literally had to buy servers, right? And I remember a third of the capital we initially raised went to buying servers, right? And obviously, as you were growing, the servers were not enough. And obviously, you had tons of trouble keeping the servers up, and so on and so on. So I think about it today, the amount of technology and platform and infrastructure that is available is pretty amazing, right? And it gets easier to build startups, and really kind of stack different technologies and infrastructures on top of each other to create something really valuable. On the downside, as you can see, some of the big incumbents, as we just discussed, also getting more aggressive, adding more of these products onto their platforms, right? So I would say it's never been easier to build something. It's never been more competitive either, right? In any single vertical.
So maybe from you, I mean, you have invested in many companies, and I'm sure you have done the due diligence or review or looked at various companies. So give us like one or two examples where companies were on the right trajectory, but then they made some mistakes and they just went sideways. And doesn't need to be a company, it can be just an example in terms of experience, or certain companies which just could iterate well. What are the 2 or 3 things they really focused on which got things right?
Yeah, and I think I caveat is what I look at is really venture scale outcomes, right? So we think about ultimately helping to build companies that can go public at some stage, right? And certainly requirements to do that are much higher and much more aggressive, right, than many other companies. And you can build great companies without raising capital and kind of growing them organically and linearly, et cetera. I just want to make sure that what I say is like the perspective of somebody that is trying to invest in companies that are trying to really go public and be a large standalone company. And so when you think about the most successful companies, what they have done, right, and what they continue to do to on that path is they usually find a very clear wedge into the market where they solve a sometimes what seems to be a small problem for a small set of customers, right? But then expand from there on in a big way, and often kind of, I would say, what companies do really well, they jump on a most recent trend, right? Where I think there's just a wave coming of technology adoption, user behavior that you could jump on. I mean, two examples. Hootsuite really got large because they were right at the right moment when social media took off, right? And people suddenly needed a tool to manage their social media. Our own portfolio company, Ada Support, which is automating chat conversations, they really took off when chat became one of the most dominant ways of customers to interact with companies, and suddenly what had been done manually beforehand now needed to get automated. So I think finding an emerging, small but emerging and fast-growing wave, nailing a wedge into the market and providing a clearly better product is, I think, the first thing that is just super important. But what is then where I think that the most successful companies succeed in the long run is really developing a much broader vision, right, beyond the initial one. And give you the example of Ada Support. So they really started in the beginning to really just automate chat on top of Zendesk, right? So one platform, chat, and it was focused on customer support. Since then, they have really expanded on many other platforms, Salesforce, Genesys, etc. But at the same time, they have now also nailed the marketing use case. So one of their largest customers is Zoom, right? And Zoom uses them to not only automate customer inquiries, but also deal with marketing inquiries and kind of deal with leads. And so, and obviously, Ada has what I would describe Ada 2.0, but they have plans for 3.0 and 4.0, right? And I think what you see is like when companies that start small don't really have many steps planned out, a long-term product roadmap, a long-term vision where the company can go, they get stuck. And I think in the public markets, you can certainly see that around Dropbox. Dropbox had an amazing opportunity, right? They got into the wedge of storage really for the individual user, right? But then they failed to really expand from there, right? They didn't really nail any particularly good verticals where more customized solutions needed to be done. They didn't really get into the workflow around storage, if that is signing or note taking. I mean, they tried, but they didn't really capture any market share there, right? They didn't really move up the enterprise and provided really enterprise-grade solutions. And so the result is basically pretty low growth. And obviously it's not a bad outcome. It's still a multi-billion-dollar company. But I think it's an example of this can also happen at a smaller scale where you get the initial traction and then you just fail to take it to the next level and kind of have these new versions of the company that you want to build.
Yeah. So, few questions. So one is any take on traditional companies which were like a say desktop type of software? They are moving to multi-tenanted SaaS player, etc. Do you see that is they have a pretty good chance to succeed, or generally it's very hard because of the DNA of the company, or
I think I would probably have seen split success, right, in among these companies. They have some that have done incredibly well, right? You think about Adobe or Microsoft, and then there's some that have done not so well, right? I would say Oracle and IBM, for example, come to mind, right? So I think ultimately it's just a matter of two things, like a company that is locked in a certain business model, right, and where the new entrants have a different business model, right, has always a tougher time kind of going against them because they destroy their current business, right. Secondly, I think leadership just needs to be bought in. This is a multi-year turnaround effort, right, and often leadership doesn't recognize that or is afraid of making these investments and going into the new direction, right? So I think if you have the right courage and the right long-term view and you attract the right talent, I think every single company can turn it around. They have so many assets still around customer relationships and existing revenues, et cetera, that they should be able to do it. But you certainly have to be all in.
So we have many questions, and I think I'll be picking few, and maybe I'll share rest of the questions with Boris, and whenever he has time, he can put some Q&A sort of thing later. And so one is really around platform SaaS services, like say Salesforce, or even say Azure services or AWS services, where you can build a product, SaaS product, using those services versus doing everything ground up. Any thoughts on those two different models, basically SaaS infrastructure companies and SaaS as a customer facing companies?
Yeah, I mean, listen, I mean, in general, my general frame of thinking about that is use whatever you can leverage where somebody has already built, right? Like it does not make any sense to reinvent the wheel, right? And trying to be full stack just for the sake of being full stack. Having said all that, there's always downsides to that. Perhaps you can't really build a good enough product because the platform you're building it on is limiting. Perhaps there's platform risk, right? Because the platform you're building on suddenly decides to compete against you, right? And so I think every single situation is a little bit differently, but that's the way I would think about, like, leverage whatever you can, somebody else has already invested in, while making sure that you fully understand what the value is you're creating for your customers, and if that platform can deliver to them.
Yeah, Netflix is a good example, which is built on top of AWS, and now Amazon has their own Prime streaming, etc. But I think now they are moving into content, and they are still able to differentiate. Yeah. So,
yeah, correct.
So one question, which is around the SaaS companies, as they are growing, what are the top 2 or 3 metrics, which is a good indicator of their health or growth?
Yeah, I think the 3 things we always looking at is, on the one hand side, just churn, right? And that usually goes even more into kind of net revenue retention, right? And so kind of the combination of what do you lose per month in terms of churn? What are you able in terms of expanding, right, and upselling, right? And some of the best companies have kind of 130, 140% net revenue retention, right? And that's mostly driven by a low churn on the one hand side, but also by a very large land and expand strategy and upselling strategy. So if you have a business where you acquire a customer first, right, and then you can really expand that business, your business with them in a significant way, that's just gold, right? I think that the second piece we always look at is kind of payback period of customer acquisition costs, right? And so it always depends a little bit in how much you're in the enterprise cycle versus kind of in the self-serve cycle, right? But obviously, if you suddenly get to payback periods of 6 months, it's an incredible investment of every single marketing dollar you put out there. And all of that then comes together in what we call capital efficiency, right? And there's this simple metric of, if you can, for venture-backed companies, if you can create more additional ARR in a year than you burn money, right, you're very capital efficient, right? And some of the best companies actually, get to a, larger than one on this one. So they create more ARR than they burn through capital, and that's certainly super important. So that's really kind of the three things we look at on a super high level. Net dollar retention, right, as a combination of churn and land and expand, the marketing efficiency, and then kind of resulting out of all of that, really the capital efficiency of the business.
So let's come to data a little bit, because whenever at least I talk to a SaaS company, everybody says there's a huge data potential in my company, data, AI, ML. So do you see a scenario where a lot of SaaS companies, they are sharing data with each other and making a better ecosystem? I mean, obviously it has its own risks, but how do you see the data play? I mean, I know it's a little too general a question, but it's still, any thoughts?
Yeah, I think this has been the dream since a long time. I mean, this whole question of data lakes across companies, right? Data marketplaces, I think is that idea is as old as the internet almost, right? And obviously tons of potential of when you think about higher profits, better insights, especially being used a lot in healthcare, where it's like, hey, if you could put all these patient records together, like how much better would our models be? I think so far there has been two things that are hindering. First of all, there hasn't really been a very good economic incentive for companies to go through that trouble, right? Secondly, there's obviously tremendous amount of privacy implications, right? And worrisome that you kind of give up data that somebody else then not appropriately uses. On the second one, we have a very exciting investment in the portfolio called Cape Privacy. They basically make it possible that you can train your model on data of another company without ever having physical access to that data, right? So they encrypt the data, so you will never really see the data, you will never have access to the data, but you can actually provide much better models, create much better models through that, right? And so they've gotten some amazing initial traction in the private equity hedge fund industry, where obviously all of these funds are very interested in getting access to much better data and kind of train their models. So we'll see how this plays out, but it's definitely a big idea that hasn't yet come to fruition in the last little while, but we might be on the cusp of it.
Okay, let's come to one area where obviously you are investing, blockchain and crypto. Any general 101 on this, how you see it?
So first of all, I think when you think about technology waves, right, it makes originally, I think the internet was very decentralized, right? Really a protocol that was open to everyone. And over the years, it has certainly gotten much more centralized and around walled gardens, right? So from that point of view, I think we're going to see a swing back to the power of decentralization, right? I think right now in blockchain and crypto, there's really three, perhaps 2.5 use cases that really work. Right? The first one is a global, permissionless, frictionless store of value, which is Bitcoin, right? So the idea of digital gold, and obviously the value of Bitcoin is in the eyes of the beholder. Right? Like there's no objective value, right? In the same way that there's no objective value of gold, right? It's just like the more people believe in the value of gold or the value of Bitcoin, the higher the price will be. But I think for me, there's no question about that. Bitcoin is a better representation of the feeling of a joint store of value, and we'll see continued success in that. The second thing that really works is everything we call decentralized finance, which is built on top of Ethereum, right? And so we've seen over the last 2 or 3 years really a rebuilding of every single financial primitive, money Lego block on Ethereum. If that is kind of exchanges, so like the NASDAQ, if that is debt, if that is options, if that is insurance. So we really see kind of the complete rebuilding of that. And with I think the most exciting one is the composability. Like everything is an API, everything is open source, right? So you don't have to ask a bank for permission to do something. You don't have to ask NASDAQ for permission. You can just list your token. And I think that idea of completely open finance that is decentralized is a very powerful idea, right? And we'll see that play out over the next decade or two. We're still very early in that process. And then the last use case that more recently has gotten a lot of traction is around what we call non-fungible tokens. So the idea that any object can be digital object can be represented on the blockchain, and you can guarantee its authenticity. And that could be collectibles like basketball cards, right? Basketball player cards, or it could be digital art, right? And the blockchain actually makes sure that there's only one item of that and it's authentic, right? And so there's been a lot of innovation around these NFTs and collectibles on crypto. So, blockchain and crypto will not suddenly replace everything. Not everything will be decentralized, right? There is many advantages of centralization, right? But I think there will be a separate stream in finance and in gaming and in collectibles and perhaps in other things like social media at some stage that's going to be decentralized, right? And permissionless and so it's going to be an exciting ride. I think it's going to play out over many decades.
So another question which is of particularly interest to me is all the people like me. I think we have a global mindset. Do you see, and you always spend a lot of time in Germany and then moved here, Victoria, and then Vancouver. Is it possible now with all the gig economy, cloud, etc., to build a good SaaS company anywhere in the world, or it's still a little bit of aspirational thing to say, but really not possible?
Yeah, I think it is. And when I think about what has happened over the last few years, it's really a democratization of knowledge and access, right? And so just a few examples, right? I think it initially started that you can learn about the Silicon Valley way of building a company and the mindset on blocks. So like the first democratization was really around knowledge, etc., right? After that came very much democratization of access to tools, right? And we talked about all of these platforms. Yep. very quickly came also a democratization of access to customers, right? In the beginning, you had to have boots on the ground. You had to be, I mean, I remember even 10 years ago, the questions of Silicon Valley investors to Canadian companies, like, when do you open an office in Silicon Valley? Because you have to be here. Nobody doubts that anymore, right? There's no question about it. I think what happened after that, and certainly has also accelerated through COVID, is democratization of access to capital. Like, venture capital is like, before it was always like, if you don't have a local VC, it's really hard to raise any money. These days, everybody is happy to invest outside of the valley in most places. And I even see it at version 1, where we've always invested pretty broadly across geographies, right? We always, we have probably invested in 10 to 12 geographies over the last 10 years. And really smaller ones that a lot of people weren't ready to invest in. But even we have now opened up our thinking of, like, why not invest in a company that is based in San Diego, or a company that's completely remote, right? And has not even an area, so not even a location, a headquarter, right? And then last but not least, which probably is most important for Canadian startups also, the last year, and especially through COVID, has seen the democratization to the access of senior talent. And when I think about our portfolio in the past, the biggest challenge was getting senior talent into the company, right? And if you're a Vancouver-based SaaS company, kind of getting a US executive to move to Vancouver, different country, kids need to go to a different school, different healthcare system, different taxing, high cost of housing prices, etc. It took a long time to fill these positions, and we got way more no's than yeses, right, in this process. Now I think everybody has opened up, both on the candidate side as well as the company side, that we can build this remote. It will certainly have different challenges, but coming back to Ada Support, our portfolio company based in Toronto, they looked for a VPN. Ultimately, they ended up hiring a top-notch engineering leader out of Salesforce, who's still based in San Francisco. So suddenly, Ada, as a Toronto company, has access to senior leadership that has been trained in the Valley. So we see democratization to everything that makes up startup success, from knowledge to access to customers, to access to capital, to access to senior talent. We see that all across the board, and it will certainly take some time to produce many billion-dollar companies in the same way and as systematically as the Silicon Valley. But the trend is here, and I'm incredibly bullish on that opportunity.
Yeah. So we have 5 more minutes left. Any more questions? I mean, there are many questions, and but if anybody wants to add any questions, feel free to do so, and we'll continue going. I think so. If someone is building a SaaS company, what are the really top, I'll say, 1 or 2 things in terms of execution one should remain focused on? So one is metrics part, which you obviously covered. Is it around, what do you look for? Is it team? Is it technology? Is it space? Maybe all of them, but any thoughts?
Yeah, I mean, listen, at the stage that we're looking for, which is really at the early stages, so pre-seed and seed, the team is the most important thing, right? And what we really look for in the team is 3 things. The first one is an incredibly ability to learn. Like, the team needs to be a learning machine, right? And you see the trajectory, how quickly they can execute on things, how quickly they can take decisions, how quickly they can learn from things. And so that's the one thing. I think the second thing is just incredible hustle and work ethic. I mean, there's just, I think in every bubble, and I'm not sure if in a bubble, but in every time like an area becomes more popular, you have a lot of entrepreneurs that enter the field, but are perhaps not quite clear how much work it is to actually start a company, right? And so you need that incredible hustle and work ethic, and be all in on making this a success. And then last but not least, we think a lot about the ability of the team to tell a good story. And it is just, we talked about GameStop before, but I think just the phenomenon we're observing right now is just people think about memes, people connect to stories. Social media has become very important, right? And I don't think in every single industry has become very competitive. And if you can't tell a compelling story why your product is unique, why somebody should work for your company, why somebody should partner with your company, why somebody should invest in your company, I think it's really, really tough to break out of that noise, right? And I think it's a very unique ability that some founders have to tell stories, and it might be exactly the same product between one company and other, but the storytelling ability creates the difference.
I'm really amazed or surprised at how, even so on one side you have all these NASDAQ and whatever stock exchanges, except other side there's a complete market around Robinhood, Reddit, Discord. There's so much trading happening through these channels that it's really taking that might be new way of things in that market. It's pretty interesting. So thanks a lot, Boris. Any final thoughts?
No, I think this is like I think if COVID and the last 10 months or so have taught us one thing is technology is more important than ever, right? Obviously, in the most direct way of fighting the pandemic, around vaccine development and so on, but in the same way to just pull forward digitization and use technology to create stronger companies and stronger connections, etc. So I think technology will literally remake every single industry, every single vertical over the next decade, and it's an incredibly exciting time to be part of it, either as an operator or as an entrepreneur or as an investor. I think there's still a tremendous amount of potential left, and it will be kind of really fun to watch that play out over the next decade.
Thanks a lot. This is phenomenal, Boris. Love it. I think great learning last 45 minutes, and thanks a lot to everyone for attending. We have a pretty good roster of panelists coming in 2021, so stay tuned for the next one. And thanks a lot for your time. Okay, appreciate it. Have a good day.
Take care. Bye-bye.